trying to make sense of the economy right now. It's, well, it can feel like you're trying to learn a whole new language, you know.
I hear you.
Yeah. So we're going straight to the source. For this deep dive, we're going to hear from Federal Reserve Chair Jerome Powell.
Ah, yes.
And we've got some recent remarks from him.
Okay.
Specifically, we're looking at excerpts from a Forbes Breaking News YouTube video transcript.
Got it.
So in this deep dive, what we really want to do is unpack what Powell thinks about the economy right now.
Yeah.
We want to see what he's saying about some of these new federal policies, especially the tariffs.
Right.
And ultimately, how the Fed is navigating all this uncertainty. You know, it seems like everybody's feeling a bit uncertain these days about the economy.
Definitely.
Yeah, and hopefully this can give you, the listener, a little bit of a clearer picture of what's going on.
Sounds good.
So where does Powell see the economy standing at this moment?
Well, he describes it as showing solid growth, which, you know, on the surface, that's a positive sign. But he also talks about what he calls a labor market imbalance.
Okay.
And as far as inflation, his view is that it's much closer to, but still above, that 2% target that the Fed has.
Ah, so a bit of a mixed picture then. We've got that growth going, but inflation is still a bit stubborn.
Right.
What does he see for the future, though? Is he sounding optimistic or cautious?
I think it's a blend, honestly.
Okay.
He acknowledges that there is a lot of uncertainty out there, and he definitely says that the risks, you know, they're sort of leaning more toward the downside. But despite all that, he still maintains that right now the economy is in a good place. And it's interesting because he mentions that a lot of economic forecasters are predicting that growth is going to slow down in the coming year.
That really echoes what a lot of people are feeling, I think. Like there's this push and pull between some good numbers, but also this sense that maybe things are starting to shift a little bit. He touches on that disconnect, doesn't he?
He does. He talks about this tension between the hard data, the things we can measure, like the solid growth rates and the low unemployment.
Right.
And then the soft data, which is really about expectations and confidence levels.
Yeah.
And it seems like those are starting to dip a little bit with higher uncertainty being reported in surveys and things. What's fascinating is that people are, you know, when they're responding to these surveys, they're saying that those new federal policies are a key factor in this unease that they're feeling.
And especially policies around trade.
Right, exactly. Trade, immigration, fiscal policy. I mean, there are a lot of big changes happening right now.
Yeah, it's a pretty significant shift, no doubt about it.
Okay.
Let's dive into the labor market for a moment.
Sure.
When Powell mentions that labor market imbalance, what specifically do you think he's worried about?
Ooh, that's a good question.
Because, you know, we've got this 4.2% unemployment rate in March.
Yeah.
And we've got an average payroll growth of like 150,000 jobs a month.
Right, right.
Those numbers seem pretty healthy.
Yeah, on the surface they do.
So what's this imbalance he's talking about? What could it mean for things like wages and productivity?
Yeah, I think the imbalance could be a few things.
Yeah.
It could be like a mismatch between the skills that employers are actually looking for and the skills that workers have.
Right.
That's definitely been an ongoing issue.
Right.
Or, you know, maybe some sectors are still really tight. You know, there aren't enough workers in those specific sectors. And so that's putting upward pressure on wages in those areas.
Yeah.
And, you know, he's not saying that that's a big driver of the overall inflation right now.
Right.
But I think these imbalances in the labor market, they could have a big impact on productivity. And also, they could eventually start to push prices up, especially if they aren't addressed.
Yeah, that's a really interesting point. It's not just about how many jobs there are, but it's the types of jobs and who has the skills to do them.
Exactly.
Now, let's talk about inflation itself. He said that, you know, we've seen a drop from those crazy pandemic peaks.
Oh, yeah.
Which I think we all remember.
We do.
But it's still sitting above the 2% target, right?
It is.
Can you sort of break down the numbers for us?
Yeah, so he pointed out that inflation has fallen quite a bit since those highs back in mid-2022.
Mm-hmm.
But yeah, the progress, you know, getting down to that 2% goal, it's slowed down lately. If you look at the total PCE price index, which is it's how the Fed prefers to measure inflation.
Right.
It rose by 2.5% over the year, ending in February.
Okay.
And then if you take out the food and energy prices, because those tend to fluctuate a lot.
Yeah.
If you look at core PCE, that was up by 2.8%.
So still a little bit of work to do to hit that 2%.
Definitely.
All right, now let's talk about the big one. Tariffs. Powell addresses this head-on writing.
He does.
What's the main message he has about tariffs?
It's pretty straightforward. He says higher tariffs will be working their way through our economy and are likely to raise inflation in coming quarters. He's pretty clear about that.
Yeah, no mincing words there. He sees a connection between these tariffs and higher prices for people, right?
Yeah, that's definitely the implication. And he points out that near-term inflation expectations have already moved up. And these are, these come from surveys of consumers, professional forecasters, and what's happening in the financial markets.
Okay.
And that's probably because people are anticipating the impact of these tariffs.
Makes sense. But what about the long-term view? Is there concern that this could make inflation a much more persistent problem?
While he does say that long-term inflation expectations are still well anchored and consistent with that 2% goal, which is really important because if those expectations were to become unanchored, as they say, then we could see the self-fulfilling prophecy where inflation just keeps going up. The Fed really wants to avoid that.
Of course.
He stresses their commitment to making sure that any price increases that happen because of tariffs don't become permanent.
Right. A one-time thing versus a new normal.
Yeah.
Now, trying to actually figure out the full economic impact of these tariffs must be so difficult.
Right. Oh, absolutely.
There's so many things going on. He mentions that uncertainty, doesn't he?
Yeah, he says it's very difficult to assess all the economic effects right now because there's just too many unknowns.
Right.
Like, which specific goods are going to be subject to tariffs, what the level of those tariffs is going to be, how long they're going to be in place. And, a big one is, are other countries going to retaliate with their own tariff?
Yeah, it adds so many layers of complexity to the whole thing.
It does.
So it's a wait-and-see kind of situation, really.
Yeah.
But does he give any sense of whether these tariff increases are going to be big?
He does, yeah.
Okay.
He stresses that there's still a lot of uncertainty about the specifics.
Right.
But he says it's becoming clear that these tariff increases will be significantly larger than expected. Yeah. And then he goes on to say that, both in terms of inflation and economic growth, the effects are likely to be bigger than initially anticipated too.
So potentially a much bigger ripple effect than they thought at first.
Exactly.
Now, how is the Fed responding to all of this?
Okay.
How are they thinking about monetary policy in this environment with all this uncertainty?
Well, he describes the economic outlook as highly uncertain, which I think is an understatement.
Yeah, it seems that way.
There's the risk of higher unemployment.
Right.
And also the risk of inflation sticking around.
Mm-hmm.
And he also points out that this new administration is making big policy changes in a bunch of different areas.
Trade, immigration.
Right. Trade, immigration, government spending, which is fiscal policy, and even regulations.
Yeah.
So it creates this really complicated and constantly changing economic landscape.
Yeah, a lot for the Fed to keep track of.
Definitely.
So how are they thinking about their monetary policy stance right now?
Okay, so Powell says that the Fed's current policy is well positioned to handle these risks.
Okay.
As they get a better understanding of what these new policies are and how they're actually affecting the economy.
Okay.
But it's important to note that he also says it is not our role to comment on those policies.
Right.
The Fed is trying to stay focused on their own mandate and not be pulled into politics.
Yeah, that's key for them.
Absolutely.
So how are they figuring out what to do? What's their process for gathering information and deciding on the best course of action?
It's all about the data.
Okay.
They're always analyzing what they think the likely economic consequences of these policies will be.
Right.
They're paying close attention to how the economy reacts.
Mm-hmm.
And then, based on all of that, they adjust their monetary policy as needed to best meet their dual mandate.
Maximum employment and stable prices.
Right.
So it's a very careful, deliberate approach.
Absolutely.
A lot of watching and waiting and seeing how things shake out.
Yeah.
Does he give any timeline for when they might start to consider policy adjustments?
He says they're waiting for greater clarity before they even think about changing anything.
Mm-hmm.
He's pretty firm on that. He says it is too soon to say what will be the appropriate path. And he repeats this, really emphasizing how much they need more information before they can make any decisions.
Patience and observation are the name of the game right now.
It seems that way.
He does describe their current policy stance, though.
Yeah.
Is it tight, loose, or somewhere in between?
He calls it moderately restrictive.
Okay.
So what that means is, they're not actively trying to stimulate the economy, but they're not aggressively tightening things up either. I think it's a pretty balanced approach considering that inflation is still high, but they also know there are risks to growth.
Yeah. Now, let's shift gears a little and talk about how people are feeling about the economy.
Sure.
Powell acknowledges that there's some unhappiness out there.
Yeah.
Even with those positive indicators we talked about. Why do you think that is? What's driving that sentiment?
He thinks it's mostly because prices are still high.
Right.
He actually says prices don't go down. They know they're paying much more for the basic necessities of life.
Yeah.
And they're right that they are, and they're not happy about it. And they're right not to be happy about it.
Yeah, it's really hard when those everyday costs just keep creeping up. And he gets that.
He does.
Even if the rate of inflation is slowing down, prices for a lot of essential things are still way higher than they were just a few years ago.
Right.
And that's what people are feeling.
Absolutely.
What about businesses? Are they feeling the same way?
He says that there's a lot of nervousness about a potential recession. And he points out that a lot of those outside forecasters, the ones that aren't part of the Fed, they've actually increased their estimates of how likely a recession is. But he also says that it's not a widespread expectation yet. And he even shares an anecdote about this business owner he talked to who was just really anxious about any sign of a downturn.
Yeah, that uncertainty is enough to make businesses really hesitant to invest or expand.
It is.
He makes an interesting comparison. He compares the Fed to a ballast. What did he mean by that?
He sees the Fed's role as a source of stability and calm, amidst all the market volatility and all the political events going on.
Right.
He says their decisions are based on data analysis, careful discussions, and staying independent from politics. They just focus on price stability and full employment. He sees the Fed as providing this calm, rational analysis and stability during these uncertain times.
It's like a steadying force in a really volatile world.
Yeah, exactly.
Now, going back to this idea of uncertainty around the new administration's policies, that seems to be a big factor for the Fed right now. How long does Powell think this uncertainty might last?
He thinks it's a direct result of all these policy changes and the fact that we just don't know how they're going to impact the economy yet.
Right.
But he thinks that the uncertainty should gradually decrease over the next year or so.
Okay.
As those policies become more clear and we start to see their actual effects.
Makes sense. As things are implemented and we get more data, the picture will become more clear.
Right.
He also mentioned something about the Fed staff using a placeholder instead of a regular forecast.
Yeah, that's because of the uncertainty.
Okay.
The Fed's economic staff, they can't create their usual detailed forecast. So they're using this placeholder scenario instead. It's more of a working assumption.
Okay.
Until they have more solid data and they understand the policies better.
So it's a more flexible and cautious approach to their economic projections.
Exactly.
Which makes sense given the circumstances. He drew a parallel to the COVID pandemic, too.
He did.
What were the similarities and differences he highlighted?
Well, he said every major economic event has echoes of the past. Things rhyme, but they're never exactly the same.
Right.
And he pointed out that right now, the economy is facing both higher unemployment and higher inflation at the same time. He called this a really difficult situation for a central bank to handle.
Because usually the policies you use to fix one problem could make the other one worse.
Exactly.
It's a tricky balancing act for sure.
It is.
He mentioned that the Fed's dual mandate goals are in tension.
Yeah.
What do you mean by that?
He was talking about how sometimes the goals of maximum employment and stable prices can pull in opposite directions. Like if trying to lower unemployment by loosening monetary policy could push inflation even higher.
Yeah.
So in that case, the Fed has to weigh how far each goal is from its target and how long it might take to get back on track.
Okay.
But he was careful to point out that it's not like the 1970s. Where those goals were really in conflict and they had to make some really tough choices.
So there are risks on both sides, but it's not a crisis situation yet.
Not yet.
Now, what about the real-world impact of all this uncertainty?
Yeah.
What are people telling the Fed?
Businesses are saying that it's really hard to plan for the future.
Yeah.
Powell even quoted someone saying, "We're trying to look around the corner. We're not even sure where the corner is."
That's a great quote.
Isn't it?
It really sums up the feeling.
Yeah. And he said that a lot of businesses are feeling that way right now.
And when you can't see what's coming, you're not going to invest or hire.
Right. Of course not.
He also mentioned Harley-Davidson and tariffs. What was that about?
So Harley-Davidson had moved some of its production to Thailand
Okay.
because of those earlier tariffs.
Right.
But now, with these new tariffs, they could be facing more disruptions, which could affect their sales and their workers.
Yeah.
But Powell was really careful to avoid commenting directly on the situation.
Okay.
He said that trade policy isn't really the Fed's responsibility and that they have to stay independent.
Yeah.
He did suggest that the people in charge of trade, they should be thinking about these kinds of real-world examples.
Right. So he's sticking to his lane. He also mentioned private equity deals being put on hold.
Yeah.
Why is that happening?
Same reason as everything else.
Uncertainty.
Uncertainty. Investors don't want to commit to big long-term investments.
Right.
When they don't know what the future holds, they're waiting to see what happens.
Like a lot of wait and see going on right now.
Definitely.
For those of us who are trying to keep up with all this, what are some of the key economic indicators that Powell said the Fed is watching?
He highlighted a few things.
Okay.
So for prices, their main focus is on the PCE price index.
Right.
But they also look at the CPI.
Consumer Price Index.
Right, the CPI, which gets a lot of attention from the public.
Yeah, for sure.
And then for the labor market, they look at the unemployment rate. But they also look at things like labor force participation rates, wage growth, the number of job openings, and even the rate at which people are quitting their jobs, which can actually be a sign of confidence in the economy.
Interesting.
They also watch consumer spending, because that's a big part of the U.S. economy.
Right.
And then also business investment, which is really sensitive to uncertainty.
Yeah.
And lastly, he emphasized the importance of the Beige Book, which gives them all these anecdotal stories about what's happening in different regions and industries.
So it's like the Fed's way of getting a feel for the economy on the ground.
Exactly. They're looking at both the big numbers and the little details.
A really comprehensive approach. Now, on a more personal note, Powell talked a bit about being the Fed chair.
Yeah.
What were some of the highlights there?
Well, he was very down to earth about it. He said he sees himself as just another person doing that job. And he said that despite all the pressure, he really enjoys the work.
Okay.
He finds it incredibly interesting. And he appreciates the great people he works with.
That's important.
Yeah. And he made it clear that he plans to serve out his full term.
That's a big commitment. And I thought it was interesting that he mentioned his purple tie.
Oh, right.
What was the story there?
Well, he said at first he just liked the color purple.
Okay.
But over time, he started to see it as a way to show that the Fed isn't political. Purple isn't really associated with either of the main political parties.
Right. It's a neutral color.
Yeah, so it's a subtle reminder that they're independent and objective.
Interesting. It's a small detail that sends a big message.
It does.
Now let's talk about the housing market.
Okay.
What's Powell's take on that?
He said there's an underlying shortage of housing in the U.S.
Okay.
And that was made worse by those super low mortgage rates during the pandemic.
Those were historically low.
They were. And those low rates created what he called a lock-in effect, where homeowners with those low rates are less likely to sell their homes and move, which limits supply even more.
Yeah, if you've got a 2% mortgage rate,
yeah, exactly.
You're probably not in a hurry to give that up.
Not at all. And then on top of that, he talked about how the tariffs could add about $6,000 to the cost of building a new home.
Wow.
Because of the increased costs of materials like lumber and nails.
Right.
And it could even affect labor costs because of the changes to immigration policies.
So we've got limited supply. People are staying put because of their low mortgage rates, and now building costs are going up.
Right.
What does all that mean for housing prices?
He thinks prices are going to keep going up, at least until the supply of homes catches up with the demand.
Okay.
Or until population growth slows down.
So no relief in sight for now.
Doesn't look like it.
Okay, let's try to put this all in a timeline. Those big tariffs were just announced on April 2nd.
Yeah.
When does Powell think we might start to see the effects of those and the other policy changes?
He said that the tariffs are a known factor now, but he can't give an exact date. He expects that we'll start to see the consequences of these changes as the year goes on. So it's going to take a few months, not just a few weeks.
Right. It's a process. Lastly, I'm curious about the international aspect of all of this. How much interaction does the Fed have with other central banks around the world?
Oh, a lot. He said that he talks to other central bank governors all the time. They have formal meetings, like through the IMF, the World Bank, and the Bank for International Settlements.
Okay.
But they also talk more informally, too. He even said they text each other.
Wow.
And they talk about economic developments, what's happening in the markets, what they're hearing from businesses, and what their governments are doing.
Sounds like they're all trying to navigate this together.
They are.
In a non-political way.
Yeah, Powell emphasized that central banks generally have a similar approach and that they have good relationships with each other.
It's like a global network of economic experts.
Yeah.
Well, that brings us to the end of our deep dive into Chair Powell's remarks. It seems like the economy is doing okay in some areas, but there's still a lot of uncertainty.
Yeah.
Especially because of these new federal policies like those tariffs.
Right.
And as Powell said, those tariffs are probably going to make inflation worse.
Yeah, most likely.
The Fed is taking a wait-and-see approach for now, but they're watching the data closely and ready to adjust course when things become more clear.
Exactly.
I think this highlights how important it is to understand the Fed's perspective for all of us,
I agree.
whether we're making decisions about our personal finances or thinking about our businesses.
Absolutely.
So, on that note, here's something to think about.
Okay.
The Fed relies heavily on data to make decisions, and right now there's a lot of uncertainty. So what economic indicators, besides the usual CPI and unemployment rate, might give us an early warning sign of how these policies are really affecting our lives and businesses? It's something to ponder as we keep an eye on the economy. Thanks for taking this deep dive with us.
You're welcome.